Hey everybody, it's Pete Renzulli. Welcome to Stock Trading Pro. Today we got a ton of stuff to talk about in the stock market today. Is there a much bigger move about to happen in the stock market? Yesterday we broke a pretty big key support level in the S&P 500. We're going to take a look at that. Is the short side of the market the smarter trade right now? And if you don't understand short selling, should you be buying inverse ETFs as the market goes down as a hedge against some of your longer term positions? There are massive things happening in the market both today and next week. We're going to break those down. We're also going to talk about FedEx stock and how FedEx reported yesterday and just absolutely imploded after the market yesterday, and why FedEx specifically, that boring delivery company, matters in the big picture. Think about it. If FedEx is hurting, nobody's ordering anything, which is a much bigger picture of the market right now, which kind of really brings in the inflation report that we had this week. And if that's not enough, we have the Fed next week as well. So all of that stuff combined, I'm going to introduce you to one of my favorite books. I get a lot of questions all the time about which books are back there, which books should I buy, which ones do you recommend? We're going to talk about one of my favorite all-time books. I believe I bought it in the early 2000s. That's how valuable this book is to me. Matter of fact, it's actually falling apart. That's how old it is. So any questions you have, please be sure to type them in. Stick around. We're going to be back in just 1 second. Okay, so thank you so much. We're actually just going to get right into it. I'm going to hop right into this book because it's actually, I get excited about talking about these kind of things. So I want to pull this book up. And the reason I'm bringing this book up today is because of the way that the market right now is trading. A lot of people are confused and a lot of people don't have a plan if things move against them. So there's two things that I want to talk about. First, this book, and I highly recommend it. Here you can see it's actually called Trading Without Gambling. The author's name here is Marcel Link. Let me pop that in there a little bit clearer for you. The reason this book is important is because he does a really, really good job of making you prepared to make decisions. And I think a lot of people, probably too many people, smart people, lose money in the stock market just simply because they're only looking at one side of the market. And if it does not do what they expect it to do, they're frozen and end up taking much bigger losses when there's really no reason to. You just have to be prepared to hit the road and go to the next idea. The second thing I want to talk about is if you're not into buying a book and you'd actually like to trade with me personally, our next boot camp actually starts next Monday on September 19th. So if you want to learn about that, there's a 37-minute training video on the page. Just click the link below the video. It's in the description. It says 14-day boot camp. Watch that video, and if you think we're a good fit to trade together, I got a whole bunch of stuff ready for you if you want to get started with us next week. So we're going to jump right into the big stuff that we're going to talk about. I think somebody typed in AMC here. Paris, we'll actually talk about AMC before the call is over today. Thanks so much for typing that one in there. Who do we got here today? Al, good morning, Al. John Oakes, always a pleasure, my friend. And Don. Don's there too. T. Brown. T. Brown's here every day with us. I appreciate that. I want you to know how much I really do. So anyway, what we're going to talk about right now, this is probably one of the biggest things that's going on today. We're obviously going to get into FedEx. We're going to talk about the Fed next week, but this is a big deal. Today is what is known as quadruple witching on options. So 4 different types of options expirations expire today. Now, why is that important and what can we reasonably expect when quadruple witching unfolds? So let's actually go through that just a little bit, just to give everybody an idea of what that is. So this is the bid right now, right? The value of the equities underlying 109 million options contracts are set to expire today. Now, why is that important? Well, when options expire, prices tend to get pegged at that level. So this means 2 different things. Number one, for options traders, today's the day. Actually, you got to really be aware of when they're expiring. Number 2, if you happen to be day trading, and again, this is a very big part of creating your trading plan, is you need to know what kinds of days you make money and what kinds of days you don't make money. And in my personal game plan, options expiration afternoons, early in my career, I used to get my head beat in and I'm like, I don't understand what's going on. So if you can just think about the nature of options contracts, they're all over the place during the time to expiration. And then the day they expire, they tend to trade a ton of extra volume as those contracts are expiring, and the equity side of things too, but they don't move. So you see these breakouts, you see these breakdowns, and everything just kind of ends up sitting in the same spot, and you end up losing more money than you should because you didn't recognize it. So to bring that all the way back home, I actually do not trade options expirations afternoons because traditionally I have not found them easy to trade because of the nature of stocks getting pegged to those individual prices. Now, how does that affect the market? Well, if we go over to the market, a lot of people are saying that this 390 level, which we pointed out earlier in the week, is a big level. And that bid on the options expiration is technically what was holding it there. And now you can actually see that FedEx imploded the market through that a little bit more. So options expiration, a big thing today. Next thing we're going to talk about is FedEx. All right, so let's go over here. FedEx just delivered terrible news earnings. It was down as much as 12% yesterday. And I just want to bring this into focus. So actually, it's actually down 20% now. It's actually down a lot more. Why is this such a big deal for the market? Everybody's like, FedEx, big deal, boring company that just bring me what I want from Amazon, right? Well, that's why. That's exactly why. If inflation remains hot and orders are going down, that's a really bad sign for the economy over the next few months and probably into the holidays of this year. So you can say that's horrible, my investments, or you could be prepared, which is what we've been talking about on the other side of the market. So we're kind of stacking the reasons for making decisions right now, and FedEx getting absolutely demolished is a really bad sign for the economy going forward, at least for the next, let's say, 3 to 6 months. Now let's add a little gasoline on that fire right now, and we'll talk about this, which is the Fed. Now, depending on where you look, I know there's Fed number watching and percentages and all that kind of stuff. It's pretty much a lock that it's going to be 3/4 of a basis points again. They're talking about the possibility of 100 basis points. Now, if you've been reading the news, which I'm sure everybody has been, the interest rates on mortgages as of right now, September 2020, is double what it was a year ago, which is now making the purchasing power of the housing market a little bit more challenging as well. Double's a big number. If you were able to lock in a mortgage anytime in the previous 18 months, my word, you probably got somewhere around 3 or 4% for 30 years. Absolutely amazing. But now the housing market is starting to feel pressure, and we're starting to see a lot of those types of stocks pull back. And let me just give you an idea on some of the ones that we're looking at over there so you can make a list. Let me actually shoot that out a little bit. So BLDR, we're looking at Lennar. We're looking at KBH. KBH. We're looking at Pulte Homes. So all of these kinds of stocks are going to end up having some much more bearish selling pressure. Now, you'd be like saying to yourself, my gosh, the Fed's going to throw more stuff on top of this. What are we supposed to do? Well, this is where you separate yourself from everybody who says, I'm afraid, I don't know what to do, and the stock market's rigged, the stock market doesn't work. You don't want to have any of that garbage going through your head. You want to be the person that when you go and you hang out with your friends, you're like, no, I'm good, I'm hedged, which means that you are either buying puts to protect the positions that you own in your longer term portfolio, or you are trading inverse ETFs to protect against those kinds of ideas where the inverse ETFs go up when the market goes down. So just to give you that a little bit more right here, if we go over to finviz.com and we go to maps, the thing you want to do is you want to click on over here on exchange traded funds, and you want to take a look at this group right here. So you can see when the market goes down, which most of the market went down, and specifically you can see over here the major indexes, the inverse ETFs go up. That's one way of hedging your portfolio. Now, I want to give you the big picture of how far the market could fall in the next move. And you probably saw that we've actually mapped that out right here, where the next level is down towards this 370 level. And then the scary part is after 370, if we kind of get this out of the way, maybe some support at 350 and then down at 322. This is the reality of the market right now. So you can't put your head in the sand. Now, here's the big difference. I got another book over here. I want to bring this out. This is where a lot of people get into trouble, okay? Is you need to make the distinction between whether or not you are an investor in the stocks that you're holding right now, or if you are trading the stocks that you bought. There's a lot of the list of the best stocks to buy now is obviously dwindling, and I'll give you that list in a second. Plus, we're actually going to talk about last night's coaching session, which is a big deal. If you are investing, and again, I'm not Warren Buffett, but let's all quote Warren Buffett. What he talks about is the best time to sell those stocks is never, right? Obviously, he's exaggerating. He says that tongue in cheek. Here's the thing. If you are actively trading these positions that you are managing right now, which a lot of people are using Robinhood and Webull and all those short-term active things, it's critical that if the market changes, the order flow remains bearish, and you are trading, that you have in place a decision to hit the road. If you are investing in these positions and they are much longer term 401k type ideas, that's different. Whether or not you want to work your way into those positions, build more as it goes down, again, make the separation between investing and trading. So when we're talking about this book, which by the way is an incredibly, incredibly good book, they're talking about investing. They're talking about value plays, which means buying stocks at a margin of safety. So if you have existing stock market positions right now, and this thing cracks and starts to move down, you have to make a decision on whether or not you are going to hold on to those longer term positions. If, and again, this is a big if we're talking about it's longer term, 5, 10, 15 years down the road, you don't need the money, then investing, you're holding on to those companies because if you did a good job, you bought them at the right price. If, again, one thing that's on this cover of this book as well is talking about a margin of safety. So obviously we're talking about Warren Buffett. He talks about margin of safety coming from Benjamin Graham, which sets us up into the back half or the back part of 2022 in the stock market. There is absolutely going to be some amazing value plays in the stock market at the end of this year. But we need to see what a lot of people call capitulation. And we're not seeing that yet. So if we go back over and we start to take a look at what the market's doing right now, and we work our way through sector rotation, you can see coming into Monday, just absolutely amazing on a Friday basis and the way it traded for the week. But then as the week progresses, you can see it starts to get a little bit weaker, starts to get very weak. Heading into Thursday, we caught a little bit of a bid, and now heading into Friday, it's an absolute complete mess right now. So what should you be doing right now? That's actually going to help us go over right now into our coaching call from yesterday. And this is actually a big deal because sometimes you just need somebody to air out what's going on in your head. And I want to give you some ideas from our coaching session from yesterday. And first, I want to start out with a quote. And hopefully you can actually read there. I want to talk about here, and it's one of our members of our community, Lewis. And if you can I hope you can read that. Let me just zoom that in a little bit. What to do when you're in a trading slump and 3 steps to get back into a trading groove. Okay. And also having a strategy is not enough. So I want to touch on these couple of things right now, because I know a lot of people are scared right now. I know a lot of people are trying to put extra capital in the markets to work right now, but you're frozen. The market's going down. Maybe you bought something, it's moving against you. Maybe you've been actively trading. And let's go back to the market for a second. And this is the reality of the market right now. If we zoom this out and we take a look on a weekly chart right now, where the market has been going up for 1 week, down for 3 weeks, going sideways for 3 weeks, going up for 4 weeks, going down for 3 weeks, a big up week, a big down week. Raise your hand if you got like maybe an adult beverage in your coffee in the morning. That's how chaotic the market's been. So all that means is you need to do 2 things. You need to get super specific on how you look at the market. And I know that sounds so insanely obvious, but you would be shocked at the amount of people who their only game plan is I just buy stocks because they always go up, and have no clue about position management, no clue about profit targets, no clue about working positions. They're basically just hoping stocks continue. But we're in 2022 now. It's not 2021, and the stock market is dramatically different. In this market, if you understand how to read the tape, if you understand order flow, this is really a great time to be an active trader. It's the traders who right now do not have a game plan, do not have a strategy. Those are the traders that are getting their head beat in a little bit right now. And if we could just go back to even when you have a strategy, you can see one of our members here, what to do when you're in a trading slump. and 3 steps to get back into a trading groove. So the first thing you need to identify when you're in a trading slump is you have to ask yourself, and a lot of people don't ask this question, is it me that I'm trading poorly, or is the market just really tough right now for active traders? Right now, it's tough if you don't have a plan, but you could also be over trading because you don't recognize that. So in this session last night, when we were talking about it, we got down to 3 steps to get back into a trading groove. Now, a lot of people won't talk about this, but it's the truth. Everybody has losing slumps. I was joking around last night on our coaching call last night that when I first started trading back in 2000, still learning my way through the markets, there were some periods of time where I was like, I'm horrible right now. I don't know what's going on. There wasn't mentoring or coaching or anything, these kind of things like we're doing right now. And I used to say I couldn't hit water if I fell out of a boat in the middle of the ocean. That's how bad it is sometimes. Now, if you're smart, you pay attention to the results and you're like, well, I need to change what I'm doing. And if I don't change what I'm doing, I'm going to end up blowing up my trading account. I'm going to have to refund it and start all over again. You don't need to do that. What you need to do if you're not trading well, again, like this person was last night, we said there's 3 steps. The first one is you have to reduce your position size. There's no other way to put it. If you are taking bigger losses than you expect, if you're frozen in positions, if you're already in existing positions, the smarter thing to do, now again, this is all educational, you got to make your own final decision, but what I do is I always reduce my position size. That's the first thing. The second thing is you have to determine, am I trading the right stocks? Am I trading stocks that have energy candlesticks where we're starting to see a lot of big green or big red candles, or am I trading stocks that are kind of stuck in the middle of nowhere and I'm getting chopped up? And I actually have one really good example of a stock that's doing that right now over the last week or so. And you might be trading the stock yourself. It's RIVN. And you can see the distinction here between all of these melted candles. And then all of a sudden, Riven breaks out, has a bullish gap, and now we go into a bunch of energy candlesticks, hit this level again, and the same place that sellers came in and did something significant, sellers came right back in, and we had an indecision candle. So are you trading where there's indecision, or are you being smart in trading when there's something to do? So remember, the first thing is to reduce your position size. The second thing is to pay attention to, are you trading the right stocks? Are you trading stocks that have smart money attention? How do we know when a stock has smart money attention? You see big green or big red candles day after day. If you're trading stocks, again, you want to take a snapshot of this. If you're trading stocks like Riven, that is just kind of chopping back and forth where it opens and closes at basically the same place, you're trading against yourself and there's nothing going on. You need to recognize when something changes and hop on that. You also need to recognize where sellers or buyers did something significant the last time. Now, the next part is actually kind of fun. There are generally certain types of lists that you need to make as a trader. And I'm going to, again, you want to take a look at this because I'm going through all of this because I think the stock market's about to hit into a little bit of a rough patch. And I want to help you prepare if the market gets more challenging to be ready so that you're in the best position to make money regardless of what the market does. And look, quite honestly, who said it? Pedro. Pedro, you're 100% right. Cash is a position as well. If you recognize the market is trading well and it's doing exactly what you want it to do, you can get involved. The part where traders, smart traders, get involved in the stock market and lose money is because what they don't want to see is happening and they trade anyway. So what that means now is as you're reducing your position size, as you're working on your trading strategy, and again, I will give you my trading strategy if you come into the boot camp with me. Click that link below the video. The last thing to do is to curate or build a list of stocks. Now, I just want to show you the list, a couple of different lists of stocks. If you pay attention to up over here in the corner, you can see that I have a list is universe, and you can see the stocks in there. They're major market stocks that move when the market moves. So if you read some of the classic trading, most active professional traders, and you want to think like a professional trader, even if you have a full-time job, when you're putting extra capital to the market, you want to put yourself in the best position. Most full-time active traders or professional traders, again, even if you have another job, trade the market leaders. If the market is easy to read, those stocks then move in the direction with the market. So for example, the last month or so, solar stocks have been very strong. Electric vehicle stocks, you know, just take a look at NEO. I don't know if you've been trading NEO over the last week. So we just looked at Riven. NEO has had the same kind of price action over the last week or so as well. So this is my list of universe of stocks. But then you break it down a little bit further. You need to go through the market itself and start paying attention to where there are pockets of opportunity in the market. And you need to be going through saying what's obvious either as a buying opportunity, what's obvious as a selling opportunity. So once you start out with the market, then you work up into those groups. And we're talking about the market. We're talking about the SPY, the NASDAQ, and the S&P 500. As you're building out these lists of stocks, I have that group of stocks. And again, if you want, I'll pull that back up on the screen. You can take a look at it. If we go back into the ETFs, my universe, you can see this list of stocks is a group of stocks that I trade every day, no matter what. Then, depending on how the market is trading, then I'm working my way into other stocks that are similar. So it would be technology stocks, it would be energy stocks, it would be electric vehicle stocks, it would be basic material stocks. So basic material stocks caught a bid a little bit, and now those are the stocks that are a little bit stronger. Now, here's the thing. Both of those kinds of lists are a must-have for anybody who's actively trading the stock market. So I just want to say this again so it's super clear so you're prepared. First thing is to learn to build a list of stocks that you trade all the time, no matter what. Those are what you might call your list of go-to stocks. So depending on your experience level, you might be trading for 3 months, or you might be trading for 3 decades. If you can handle more, if you could make more distinctions, your list is going to be a little bit bigger. But most traders will start out with a smaller list, let's say 3 to 5 stocks that they watch every day. And a good question is, where do I find that list, right? So let's actually give you that right now as well. So if we're working our way through, and again, you go through, you build your list of stocks, right? And we have lists of ideas, right? So you have the sectors, you have the broader group of sectors, and then you have all the stocks that are broken down in those sectors, right? A big part of trading is knowing the leading stocks in the leading sectors. So this is a tremendous place to start building your list of ideas. So if you start to build that list of ideas, which I strongly recommend you do, start out with stocks in the Dow. Start out with the top stocks in the QQQ. Start out with the top stocks in the S&P 500. Pick the top 20. And then from that top 20, depending on the size of your account, depending on your risk tolerance, you're now going to be looking at market leaders to trade when the market has pockets of opportunity. So when the market's obvious, you go to those stocks, and those generally follow the market. Now, the question we get all the time is, well, why don't I just trade the SPY? Why don't I just trade the QQQ? And there's a reason for that. If you're good at stock picking, if you have a strategy, don't diversify. The ETFs, by their very nature, it's in their name, is they are a diversified portfolio of stocks. And by their very nature, they do not move as much as individual stocks. We've had some stocks recently. Just to give you an example of one of the stocks that we've been trading a lot of is ASAN. You take a look at the percentage moves that these stocks have made, and let's just give you an example from here to here. It's a 58% move in 5 days. These are the kind of reasons that you want to have a list of individual stocks. There's not that many ETFs or indices that are going to move 58% in 5 days. But when you break down the market, break down the sectors, and then the individual group that ASAN is in, then you start to put stocks from that group into your watch list, and now you stay with that pocket of opportunity. Now, what we're doing is not challenging. It's really sector rotation. It's just that you need to be set up properly before the market opens. So our job is to say, is the market really obvious right now? And actually, the answer right now is yes, it's going down. So now you would say to yourself, well, which sectors are trading with the market right now? So if we break that down a little bit more and we go into sector rotation, we can see at the top of the list for strong for the week are energy stocks. So we'd work our way over to our list of energy stocks, and we would break that down. Oh, let me get that off the screen. And we would start to cycle through energy stocks. So we would sort the energy stocks and look to see which, if any of them, have relative strength. And you can see right now, APA is resting right at a breakout level, and it's not that down that much this morning. So we'd be looking at some of the, look, there's a couple of them, APA, SLB, Chevron, COP, actually really nice breakout and room to go. So just in this very short call right now, we're doing a training session on the market, relative strength, and then stock opportunities. So we just broke it all the way down from the market to the sector to individual stocks. That's on the positive side of the market, because in the sector rotation research that we do every night, energy is at the top. Now, on the other side of the market is real estate. So we actually just went through the Fed, interest rates, and home builder stocks, which are actually going down. So we kind of actually gave you that list of stocks already. Now, one of the bigger list of stocks that is really getting hit hard right now is large cap tech stocks. Tech stocks are getting hammered right now, and I think that's been leading to the downside based on NVIDIA last week with not good news, and then actually Adobe came out with news this week again, so we'll just take a look at those. So those are on the other side of the market, where you can see technology is actually near the bottom. So once you have your technology stocks and you understand those are the stocks that are on the other side of the tape, then you start to work your way into your list of technology stocks, and you'd have a whole list of technology stocks over here as well. So you can start to see how you break that down. The other side of the equation, which is probably not talked about enough, right? This is where it gets really interesting. Let's say that, let's look at Curlin. Let's use Curlin as an example, right? Or Tom Lu. Tom's here every morning, right? So let's say Tom is in our community and Tom's like, wow, I was trading this stock really actively for about 6 months and I was making money. But now, no matter what I do, I can't make money in it. You got to pay attention to those things. Here's the one of the biggest, I don't want to say secret, but one of the things that a lot of people don't know about the markets, and quite frankly about active trading and running a trading business. It's very common when stocks reach different price levels for them to trade differently. So if you have a list of, let's say, 7 stocks that you watch every day, and you have the sector rotation ideas like I just taught you, those groups of stocks that you trade every day, it's very common for some of them to stay in there for 3 months, and then you're like, wow, I can't read them for anything. And you know what? Take them out and put 2 other stocks in. Take them out, put other stocks back in. That's a big thing with trading, is to recognize whether or not you can still read those stocks, or if the stock just got to a different level and now different participants came in and the stock's personality changed. So I'll give you an example. Like some of the stocks that I trade pretty much every day, well, let's say every week. I don't want to be held to every single day, but I trade AMD every day. Let's say every week. AMD every week. I trade SQ or Coin. I stick with those stocks that have reasonable volatility. Tesla, once in a while, not really up in, I like to trade stocks that I could call out for the entire community. I will trade the electric vehicle stocks. So if Tesla is obvious, then I'll be looking into that group of stocks. Solar stocks have been a big group of stocks that we've been trading very, very well. So if we take a look at some of the solar stocks and you have an idea of what they're doing, and again, we'll go over here. It's an energy stock, but more specifically, it is a solar stock. And you can see the size of that list of solar stocks. And you can see even with the market getting hit, these solar stocks have been what we call holding the bid, where they've actually been going up while the market's been going down. So for those of you right now that have been frustrated or talking about that there's not that much to do, I want to tell you right now, got to work just a little bit harder. We just went over a whole bunch of stocks, both on the energy side of things, that universal stock I look at, as well as the solar stocks and electric vehicle stocks. We just talked about NIO, that percentage move in NIO over the last week, pretty darn big. I want to say it's probably in the area of 15%, maybe even more than that, 32%. So if you're not finding opportunities right now, I strongly encourage you to watch this video again one more time. If you need some help with this kind of thing, this is the stuff that I give to our community every day, where we start out with sector rotation for the week, where I'm pointing out to everybody where the smart money has attention. And that's the first area that we're looking at for ideas. Then we break it down to which stocks are in play for the last 10 days, for this week, and then for the month. We're breaking this down further to find out which stocks are in a groove right now. Then we're obviously keeping an eye on earnings as the week unfolds as well. The process of successfully trading the stock market can be as complicated or as simple as you make it. I prefer simplicity. And the way that we word that to everybody is it obvious? How long has it been obvious? How do we know if it's still valid or if it changed? When you answer and ask and then answer yourself those simple questions, you will be shocked at how much less stress you have in the stock market, even if it's going down like it's going down now, because I just showed you probably a dozen opportunities that have been bullish over the last 2 weeks while the market has been getting hit pretty hard. So it really just means that you need to spend that 30 minutes per day, which, by the way, that's all we suggest, 30 minutes per day, especially if you have a full-time job. And I'm giving you all this research if you happen to be in our community. So again, our next boot camp starts next Monday. Click the link below the video. Watch that 37-minute training video. If you do that 30 minutes of what we call game planning, I call it a treasure hunt. This is the biggest thing that I want to make sure I make this point today. Everybody says, where do I get confidence from? Where do I get conviction from? How do I start to feel like I really know what I'm doing? It's from doing that 30 minutes of game planning. It's that 30 minutes of a treasure hunt. Now, remember, let's use somebody as an example. Let's use, I hope I say this correctly, Eve Lumlum. I don't know how to say that, right? If you are doing the game planning, if you are going on a treasure hunt, then you will have the conviction to say, I'm prepared no matter what happens. If it goes up and moves in my favor, fantastic. I know how to manage it. It's planned out already. If I put a trade on, and let's actually give you a real example from yesterday, which was a stock that was in the game plan from NEE. NEE, prior to the news, at that particular moment was actually a pretty darn good idea. A lot of people would know that as a classic bull flag. That was in the game plan. We also know that that's a bullish U-turn, right? That's a short-term momentum move. But then the next day it opened down there and just got absolutely crushed. So we had a good question yesterday. Can I still day trade that even if the stock did not meet my bullish criteria from my game plan? Now, this is a really important question. A rookie might say, yeah, absolutely. It closed green that day. I'm going to say no. No. And I'm going to tell you why. I want to say this in the most actionable way that you can get. There's a lot of opportunity that you could possibly take during the day. Before you hit that buy button, you have to ask yourself, is this the best idea available now? And I think you'll be shocked sometimes that the answer will come back. We'll be like, maybe not. But you find yourself taking it anyway. It's those moments of decision, whether it's a day trade, a swing trade, or an investment, that you need to listen to the answer, because you will be shocked that if you learn to stay away from those trades that you know you shouldn't be in the first place, or investments, quite honestly. Maybe you're picking a bottom. Maybe you're trying to pick a top. Maybe you're trading the stocks in the middle of nowhere. Those are the ones that get you paid. When you stay away from them, you instantly move closer to profitability. So what I want to do here, I just want to give everybody a chance to take a snapshot of this. So this is the list of stocks that we're looking at today. You can actually see it's getting smaller and smaller. If you want to take a screenshot of that, you can get an idea of some of the ideas that we're looking at today. So a lot going on. Quadruple expiration today. FOMC next week. FedEx down 20%. The market broke that 390 support today. There's a lot going on. From a short-term active trading perspective, it's been amazing if you understand how to read the tape. All right. If you want my help and you want to trade with me for a few weeks, click that link below the video. Watch that video. It's about 30-something minutes. And let's make a decision if we want to trade together for a couple of weeks. Have an awesome day, everybody. Thank you for being here. I really, really appreciate it. Take care now.